Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for coming on today.
Good afternoon.
Well, stocks on Wall Street closed lower on Wednesday when minutes from the Fed suggested that officials want to keep raising rates aggressively, but then on Thursday they bounced back a little. The S&P, the Nasdaq, about 0.2%. What's the story in the global markets?
Yes, if you look at the U.S. market, it recovered slightly, where Dow was up by 0.06%, S&P 500 and Nasdaq were up about 0.2% or so, and small caps were up about 0.7%. Clearly, the volatility still remains to be quite high because of the uncertainty that we're seeing in the U.S. economy. A lot of people are concerned about the possibility of economic recession due to high inflationary pressure, and the Fed continue to be tightening quite aggressively, and that might result into quite significant slowdown in the economic growth rate. If that continues, then most likely the earnings for the U.S. company can be quite threatened going into the future as the economic growth rate slows down or even show possibility of recession. But in terms of the company basis, there are quite a mix of signals. If you look at the Cisco Systems, the share price jumped 6% post results came out. Some of the new energies or the renewable energy stocks were showing quite significant rise yesterday, while some of the specific companies like Bed Bath & Beyond tumbled 45% due to the selling out of the major investors. So clearly there's a mixed signals coming out. Uncertainty regarding the U.S. consumption stories, and also if you look at the overall volatility in terms of the inflationary pressure, people are still cautious. Yes, there's a possibility that the numbers will be coming down in the futures, but how aggressively the numbers will be coming down in terms of inflation numbers, people are quite doubtful. Despite the energy prices coming down aggressively, while you are seeing some of the rental prices and other major core inflationary numbers are still showing well above 5% growth rate. So still the mixed signals coming out. I think the volatility might be continue to be happening over the next few weeks because we're not going to see what Fed might be doing until September 22nd, and also we're not going to see the inflation numbers until probably 3 weeks from now for the month of August.
Right, and Korean stocks falling today, the KOSPI below 2,500 points now. Only a few bright spots like carmakers, which have been beaten up a bit this week. Foreigners return back to net selling. Tell us about the domestic market.
Yes, if you look at the KOSPI, it's down by 0.6%, and Nasdaq is down by quite significantly at 1.44%. Clearly, this volatility remains to be such because of the U.S. dollar continues to be quite strong. We did see the U.S. dollar weaken to below 105 level, but now recovered back up to about 107. So clearly, dollars continues to be resilient in terms of the prices. And also, if you look at the Chinese market, it also showed Shanghai is down by about 0.6%, and the Shenzhen index, which is similar to the Nasdaq, is down by 1.3%. So clearly, the pretty similar level of decline. Clearly, all is related to what's happening to the economic growth rate, what's happened to the currency. Chinese demand seems to be becoming weaker, and growth rates becoming weaker because of the real estate environment is quite poor for China right now. People are concerned about the consumption number might be coming in below expected in the future. All that means that could be negative news for Korea as well, given the fact that half of that export is coming from China, and also remaining half that coming from U.S. or so. So clearly, there's mixed signals also in regards to what's happening to the Korean economy. We think that the Korea's valuation seems to be quite cheap, so therefore a level of decline might not be that significant. But in order for the market to go up, we need to see currency stabilization and overall current account surpluses continues to be strong, and the trade surpluses needs to be happen. Right now, we are seeing continue to be quite negative news coming out in terms of numbers in regards to trade.
Well, with the dollar strengthening, as you mentioned, now the exchange rate's at its highest in many years, surpassing the high we saw in the middle of last month, closing today at around 1,326 won to the dollar. Today we saw another sort of verbal intervention by the finance ministry to prevent capital outflows, talking about issuing more long-term foreign currency bonds. What do you see happening with the exchange rate?
Right. As you said, Korean won continues to depreciate. It is hitting 1327. This is not something that we have expected, given the fact that the U.S. dollar has been a bit of depreciating from the peak of 109, 110 level to now 107. It did go down to as low as 105. So clearly the trend is a bit more of a weakening of the U.S. dollars. But in terms of the Korean won, it seems to be keep hitting the record high numbers. If we try to understand why this is happening, it's because of two factors. Number one is that Korea's overall retail fundamentals in terms of the consumer debt as GDP is quite high, well above 100%, and therefore people are concerned about the domestic consumption to continue to be weak into the future. The second factor, obviously, is what's happening to the trade surpluses. It turned to the deficit, given the fact that if you look at the overall energy prices and the currency weakening affects that quite negatively. So inflationary pressure for Korea to be quite strong given the weak currency. So overall, those two factors are making quite of a negative implication for the overall Korean economic growth rate. However, though, if you think about the competitiveness of the export players, including the EV makers as well as semiconductor side, currency depreciation is actually positive news for the earnings. So when you look at the overall earnings perspective of the Korean companies, they are showing a record high level of the earnings numbers. So the confusion comes from what the economy might do versus what happens to corporate earnings, whereas the foreigners are not necessarily a seller of the market, given that even though the won has depreciated quite significantly because of the fundamentals or the valuations seem very cheap for Korean companies. So that kind of uncertainty will continue to be happening, whereas we think that as long as the U.S. dollar continues to weaken to maybe 100 level in the over the next 6 months to 12 months, then Korean won has some room for appreciation, and it might fall down to as low as 1250. But right now, it's continue to be quite cautious, and as long as the U.S. dollar seems to be quite resilient in terms of the going down or depreciating.
Got it. All right, we'll have to wrap it up there, Mr. Yu, and we'll keep an eye on that exchange rate. Thank you as always for coming on the program, and have a great weekend.
Thank you. You too.